Silver just crossed a line most people said would never happen. Not next year, not in a decade, not maybe someday. Today, silver just hit $100 per ounce. But here's the part nobody's prepared for. At the exact moment silver hits $100, some of the largest and most respected coin dealers are doing something shocking. They're not raising prices, they're not celebrating, they're not even negotiating. They're stopping purchases entirely. And that raises a much bigger question. What happens when the price says $100, but the market can't handle it? $100 silver. The impossible just happened for months, actually closer to a year. People said this could never happen. Silver was supposed to collapse. It was supposed to fall back into the teens. It was supposed to be dead money. And yet, here we are. Silver is officially trading above $100 per ounce. Not speculation, not theory, not hype. The spot price confirms it. What makes this even more extraordinary is how fast it happened. Just months ago, silver was trading under the low $30 range. Now it's more than triple that price. In the last week alone, silver has gained more than 10%. In the last 24 hours, it moved several dollars in a single day. This is not a slow, controlled bull market. This is acceleration. And acceleration changes behavior fast. Why the community feels vindicated for a lot of long-term silver holders, this moment feels validating. For years, silver was dismissed, called outdated, called irrelevant, called a waste of capital. People said industrial demand didn't matter. They said above-ground supply was endless. They said silver would never catch up to gold. And yet, here we are. Silver is finally responding to exploding industrial demand, constrained mining supply, and years of price suppression relative to gold. When gold moved into the thousands, silver lagged behind. Now silver is closing that gap, aggressively. And emotionally, that feels incredible. But emotionally driven markets are also the most dangerous. The problem, no one expected. Here's where things take a turn. While prices are celebrating, dealers are under extreme stress. Across the country, many coin shops are seeing something unprecedented. They are buying far more silver than they are selling. People are rushing to lock in profits. People are cashing out decades-old holdings. People see $100 silver and think, this is it. That creates a massive imbalance. Dealers are not just price takers, they're risk managers. And right now, risk is everywhere. When a major dealer hits pause. This stress became visible when a large, well-established coin dealer publicly announced something almost unheard of. They temporarily stopped buying silver altogether. Not because they dislike silver, not because they think the price is fake, not because demand is weak, but because their secondary market partners are overwhelmed. Refiners and wholesalers have reached their limits. Backlogs are growing. Payments are delayed. And here's the key phrase they used. We are unable to responsibly process additional purchases. That sentence matters. Instead of slashing prices, instead of offering unfair bids, instead of exploiting panic sellers, they chose to pause. That's not weakness. That's discipline. The cash flow reality. Here's what most people don't realize about coin dealers. When a dealer buys silver, they don't instantly get paid by refiners. They ship the metal gets processed, the order gets verified, then, and only then, payment is sent. Right now, that process can take weeks. That means dealers are fronting enormous amounts of cash, thousands of ounces, hundreds of thousands of dollars, sometimes more. Even if the price is locked in, cash is frozen. And most small to mid-sized dealers do not have infinite capital. So if they keep buying at record prices while waiting weeks to be paid, they risk shutting their doors entirely. That's the real bottleneck. Why fair dealers pause instead of lowballing? Here's the important distinction. Some dealers respond to stress by cutting offers brutally. Others refuse to do business unless they can remain fair. Pausing purchases is actually the more ethical choice. It protects customers, it protects the business, it avoids panic pricing. This is what happens when price moves faster than infrastructure. Markets need time to adjust. Systems need time to process volume. Liquidity doesn't expand overnight. Why speed is the real problem. The issue isn't $100 silver. The issue is how fast silver got there. If silver had taken 4 years to move from $33 to $100, this would look very different. Dealers would adapt, supply chains would expand, liquidity would normalize. But this move happened in months. That creates emotional decisions. That creates bottlenecks. That creates shockwaves. Fast markets always expose weak links. What this means going forward. So where does that leave us? $100 silver is real. The demand is real. The stress is real. But so are the consequences of rapid price moves. Some people will take profits, and that's understandable. Some will hold long term, and that's understandable too. What matters most right now is awareness. Price alone does not equal liquidity. High prices don't guarantee easy exits. And when markets move this fast, even professionals slow down. Now I want to hear from you. What are you seeing in your local market? Are dealers still buying? Are prices widening? Are shops pausing purchases? Drop your experience in the comments, because what's happening right now is not normal, and it may redefine how silver trades from here forward.